Good day all. Ira Epstein of Linn and Associates with your metals market update, and this is for Tuesday the 9th of July 2019, and we're about 2:30 p.m. Central Daylight Time. Well, tomorrow starts the big event of a two-day interview, if you will, by Chairman Powell as he delivers the status of the economy to first the House Financial Committee, then he's going to be in front of the Senate on Thursday. Now, I realize traders are going to hang on every word, but does anyone honestly think that he's going to undercut his monetary policy committee and tomorrow spill the beans and say, hey folks, at the end of the month we're not going to cut interest rates, the jobs data was too strong, or hey folks, even though the jobs data was strong, I look at the other parts and we want to get an insurance cut or we want to get a series of cuts in. If that's what you're looking for, I think you're going to be mistaken. I do think he'll talk around that. I do think that he's not going to spill the beans. How's that? I think the market will walk away from it with a decision, and that decision that the marketplace still has is that the Fed is going to give you a quarter-point cut. The market seems to think it's the end of July. Some traders think that it's September. We'll see. I know there's a group of traders that say, I don't see why the Fed has to use one of its bullets just now. Why not wait and see how the economic data keeps coming out? They could well do that. The Fed's also going to be questioned, and that's why the metal markets are so important on this. What do they think about the trade disputes going on, the tariffs, the impacts of all that going on? What about Europe? You're going to hear questions about that tomorrow. You can see copper. Copper is not buying into the idea, I think, that at this point down another 3 cents, that the U.S. and China, even though talks are due to start this week again, that they're any closer than they've been since they broke down. That's how I'm reading it. The dollar's still strong, most currencies against it. Now, if the dollar's strong, is that a sign that the Fed is going to cut interest rates? It's another question you've got to ask yourself. Generally, if they're going to cut the rates, you would think the dollar falls against those currencies. Just throwing out stuff to you there. On the weekly chart of gold, just closes. You can see the markets at this moment down a little bit for the week, about $1.50 or so. When we look at the chart, we can see that the market is trying to finish out. And in fact, I know it already finished about a tick higher because the settlement price comes in at 12:30 p.m. Central Daylight Time, even though the market trades to 4 p.m. Central Daylight Time. I hate that scenario, but that's what the Merc does. Well, when I look at this, I'm seeing a big distribution area up here, and the question is that area, what does it offer? If you go up, you still have to clear a lot of ground here. If the market starts down under here, you don't hit support till you're back down into the 1350 area. So the question is, what was today about? Well, let's keep looking. What we see on this chart is we had a period of lower highs. Prior to this, we had a higher low. You see right there, I left that arrow there. That's not the way it is right now. Right now, you remove that, you've got lower highs. Today's low took out the previous low right into my line in the sand, the 18-day average of closes. You see that right through here? And that's where the battleground is at this point. So you've completed, and I want to use that very carefully, that word. You have completed a leg to the downside. You've gotten away from the upper Bollinger Band. You have fallen back to that line in the sand, and the market is fighting its battle right here, right now with what's going on. At the same time, the market is worked off. It's no longer in an overbought status because both numbers that make up the slow stochastic are back under the 70 level. So I have a market that's in a short-term downtrend on the swing line. It held key support. It kept the bias to the upside since it closed over the 18-day average, and it has worked off, past tense, being overbought. In GLD, you did not get under the previous low. So you still have the pattern of higher lows, but at the same time, you have lower highs. Do you see that right here? Now, which way do you break out? It's the same question as I have on the other market. If you can get over 132.34 tomorrow, well, that sets up that the market's going to fight into this resistance zone. If the market breaks under this whole area right here and closes under 130.99, it sets up for the potential for more downside. As we look at GDX, sideways as can be. It's still holding its uptrend like the other two charts. As you can see, if you get under 34.68 and settle under this, you got to be, I said 34, it's 24.68. If you settle under 24.91, then you've set the market back into a downtrend. Very important area. The difference on this chart is you're still very overbought. You see the 75 readings? You're not trying to embed with both numbers over 80. You're just overbought and you've gone sideways. The gold-silver ratio is corrected from 93.33 back down to 92.50. Okay, it's not a change of trend. Gold is still overall stronger than silver. But the silver market did something interesting today too. It had an outside day up. Now, if you take a look at the green line, which is the 100-day average of closes, 1520.80, and the 18-day average at 1519.90, let's call them the 1520 area for better than anything. That's your resistance zone. Close over that, and for the first time in a long time since this whole correction began from up here, I will declare the market to be, at least as a chartist, in an uptrend. Higher lows, higher highs over the 18-day average. It would be nice at that point to see momentum flip to the upside. It hasn't. Has the market changed anything then today? Yes, it negated the downtrend. You know, I have the swing line pointing with higher lows, higher highs, but it's not in an uptrend because it didn't get over these two averages at this point. In the copper, this is what I think today was a cover my short day. You hit the lower Bollinger Band. You hadn't hit it since back here. Copper doesn't typically stay much under it. You can bend it, but it likes to stay within the Bollinger Bands. Certain markets do, certain don't. This is one that apparently likes to do that. So I do think that today was an important day, and I think some people are taking money off the table. You're back into this support area you had before. The question is, where does it go from here? You're oversold in a downtrend, and you hit one of the support zones. In the palladium market, the market's in a downtrend with lower highs, lower lows. Today the market got up as high as the 18-day average at 819, failed against it, and finished off closer to the 815 area. Momentum down, bias down, trend down. You'd have to get back over right here, the 820, what is that number? 823.90. to negate the downtrend. So that's the number I think that the bears don't want to see the market get over. In the palladium market, I'd be very concerned here. Because of how the market's finishing up near the lows of the day, the math on the slow stochastics is likely going to drop the red line tonight when it reopens underneath the 80 level. When you lose the embedded reading, it's as good a number as any that you say, okay, I think it's time to back away from my serious bullishness, and I was a serious bull. So I think you're in a pause area if that occurs tonight. Is there anything bearish? No, I'm not saying that, but I do think that we've run out of upside momentum temporarily. In the dollar index, the confusion comes in. If the Fed's going to cut interest rates at the end of July, why is the dollar railing? That's the first thing I ask myself. Is it because our economy is going to get better? Or are they cutting interest rates, as some people think, for an insurance cut, or as others think because the economy is slowing down and the Fed wants to get ahead of the curve? I don't know. I do know that the inversion is still there, and that's a problematic sign for down the road, and the Fed probably sees that. So tomorrow's conversation is going to be very important, and I'm thinking that this has been one heck of a run, so no reason to stop it until it stops. If the market takes out 96, 76 and a half, I'd have reason to say, okay, something changed in the market. Until then, I realize it's overbought and it's in a run to the upside, and that's one of the ways that I'm looking at it. If you're new to the futures markets or want to learn more about them, we have this futures trading kit that we put together for you. And it's really a link that we're going to send you. It opens up. It'll place an icon on your desktop for you, and away you go. You can see all this different information in it. We've broken it down into many, many different chapters, 10 of them to be complete. And a sampling just gives you an idea, the history of where it all began, which is nice to know. But this is meat. Now you start getting into the chart patterns, other information that we include. Then you're going to learn about technical analysis. We do our best to put together some ideas for you there. Other brochures that will discuss different parts of the market. Trading options. A lot of you like option trading. It's there. Cause and effect deals with the Fed and how M1, M2, and M3 money moves through the market. In other words, the speed of velocity of money moving through the economy and what that does, which is part of what interest rate cuts or increases are all about. Then our indicators, two of them that we've created video series for, called the Arun and the Pivot Point. Then a link comes in here and it takes you to the current CME webpage where you can find out the different brochures, the different ideas. We also include in this access to our different charting software and all the other features that we offer. So you download it, you'll want to get us to sign you up for your user ID and password, and we'll be happy to do that. And yes, your trial to it's free. How do you get it? Either call us, go to our website, www.iraepstein.com, or you can even click up here. It'll take you to our home page. Both of them will, and then look for the Futures Trading Kit on our carousel of free offers, and away you go. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.